What is going on, everybody? Welcome back to Coin Crusader, your daily destination for breaking down the financial markets, the crypto landscape, and what many of us believe is the greatest transfer of wealth in the history of the world. I'm your host, Zach Rector, and I am genuinely fired up about today's update because there is a lot happening all at once. And if you've been paying attention, a lot of it is starting to connect in ways that should have every XRP holder sitting up straight right now. If this is your first time here, welcome to the family. If you've been riding with us, you already know how we do this. Subscribe if you haven't, smash that notification bell, and let's get into it. It is Monday morning, June 22nd, 2026, and the markets are already giving us a full-course meal before noon. Let's start with something I flagged in my Discord group over the weekend, because I want you to understand I'm not just reacting to headlines here. I'm watching the signals before they become the story. Japan is intervening in the currency market again. That's what this looks like on the chart. I'm zooming in on the 1 hour here, and you can see we had a wick all the way down to 169, then a sharp snap back up to 161.9, and as of recording, about 8:30 a.m. Pacific, 11:30 a.m. Eastern, we've since dropped back to 161.2. Somebody stepped into that market and caught that falling knife, and I'd wager we'll see official reports confirming that intervention within the next 24 hours. This is not a random data point. This matters deeply for what we're watching in crypto and equities right now, and I want to make sure you understand exactly why before we move on. This brings us back to the yen carry trade, one of the most underappreciated macro risks in the entire financial ecosystem, and one that most retail crypto investors don't even know exists. Here's the short version. When the yen weakens significantly, institutions that borrow cheap yen to fund positions in higher-yielding assets are forced to unwind those trades. They sell risk assets, stocks, Bitcoin, XRP, anything with a heartbeat to cover their exposure. I broke down exactly what this looked like the last time it happened, back in August of 2024, inside my Discord, with specific data on how Bitcoin and XRP moved during that period. And I'm going to tie that analysis back to where we are right now on the XRP chart a little later in this video. So stay locked in, because it's going to matter. Now let's shift to something that made headlines across every financial platform this morning. SpaceX has dropped 10.5% since its IPO, erasing over $250 billion in market cap in what feels like the blink of an eye. The stock is sitting back around $165 a share as I record this, and a whole lot of retail investors are going to be left holding that bag. I want to ask you directly, did you participate in this IPO? Drop it in the comments because I think this conversation is important. My honest read on what happened here is that this was a beautifully orchestrated exit liquidity event for early investors and insiders. They set the stage perfectly. There was a geopolitical peace deal that created this wave of optimism, a ceasefire that gave markets room to breathe, and a celebration around the 250th anniversary of this country building up in the background. Conditions were ideal, and right into that wave of euphoria, we got the largest IPO in the history of American capital markets. Here's what I want you to take away from the SpaceX situation. I passed on investing in SpaceX when it was still private. I thought it was already overvalued then. That's a decision I'm comfortable with, and here's why. The fundamentals and the valuations never quite added up for me at those levels. But I want to be clear, I'm not here to dunk on people who bought in. I'm here to have an honest conversation about what just happened in the market, because I think it marked a short-term top for equities. When you get that kind of retail frenzy, when you see that level of euphoria baked into a single IPO event, historically that tends to be a moment where the smart money is walking out the back door while everyone else is rushing in through the front. The market will tell us whether I'm right or wrong, but that's how I read it. Now here's where things actually start getting exciting, because while the legacy market world is having its SpaceX drama, the blockchain world is making moves that most people are sleeping on. The New York Stock Exchange's parent company, ICE, is teaming up with OKX to bring tokenized stocks to market. This is issuer-based tokenization we're talking about, not synthetic wrappers, not SPVs, not some custodian holding your shares while you hold a token that represents economic exposure. We're talking about the actual stock issuer putting their equity directly on the blockchain, one-to-one, with full voting rights, fully backed, no middle layer. That is a completely different conversation from what's been done so far. And I want to make sure everybody understands the distinction because it fundamentally changes the risk profile. Let me explain the current landscape for a second because there's a spectrum here that people need to understand. On one end, you have wrapped stocks, where a custodian holds real shares and issues a token representing your economic exposure. That's a step forward, but there's still counterparty risk. Then you have SPV structures, special purpose vehicles, basically a private label version of an ETF, where a company is set up specifically to hold the shares, and you own a piece of that entity rather than the stock directly. We've seen this with pre-IPO opportunities around companies like OpenAI, Anthropic, and even Ripple. And a lot of people got burned during the SpaceX IPO frenzy, chasing synthetic versions of those shares on secondary markets without fully understanding what they actually owned. That's the problem with the current system. What OKX and ICE are building is the answer to that problem. The OKX creator, Hader, put it plainly, there's still a lot of work ahead to bring issuer-based tokenized equities to market, but this is a meaningful step, and the partnership with ICE and the New York Stock Exchange gives it legitimacy that most previous attempts never had. Regulatory clarity is a core part of the pitch here, and with near-zero counterparty risk on the table, this is the kind of infrastructure that could genuinely open up institutional quality investment access to everyday people around the world. That's what real financial democratization looks like. Not just buzzwords, but an actual technical and legal pathway to get there. We're not there yet, but the architecture is being built, and that matters. Now here's where XRP becomes the answer to the question of which blockchain wins this race. The data is already speaking. Over the past 90 days, the XRP ledger has led every major blockchain in real-world asset tokenization inflows, pulling in approximately $1.9 billion, ahead of Ethereum, ahead of Solana, ahead of Stellar, BNB, Avalanche, and everyone else in the conversation. And according to Luke from Ripple, who's got one of the best bios on social media, calling himself middle management at a bank called Ripple, we've added roughly another billion on top of that since the last update. So we're approaching $3 billion in RWA inflows over the past 3 months or so on the XRP ledger alone. That is not a small number. That is market-leading infrastructure performing in real time, right now. And then layer on top of that what's happening with the agentic economy. Because this is something I touched on during my Father's Day update, and I want to expand on it here. AI agents are no longer a future concept. They are transacting value on the XRP ledger right now, live, today. Shout out to T54 and founder Chandler Fang. I did a full interview with him that you should absolutely go check out if you want to go deep on this. But here's the framework. T54's X402 payment facilitator allows AI agents to complete payments directly on the XRP ledger. The X402 secure layer handles risk checks, and Claw Credit gives agents access to native credit. You're building a full financial stack for autonomous AI participants. That's not hypothetical. That's operational infrastructure, and XRP is a settlement layer underneath all of it. Then you stack XLS66 on top of that, the new lending protocol on the XRP ledger that allows you to lend and borrow directly on chain. Now you can become your own bank. Your AI agent can help you analyze which lending or borrowing interface best suits your goals. Eventually, and we're closer than most people realize, your agent is going to be handling those decisions and executing those strategies on your behalf. Think about that progression, from having a little XRP buried in a cold wallet to deploying that same XRP into a yield strategy, lending it out, running it through an ETF with an income layer on top, while your AI agent monitors and optimizes the whole stack. The number of ways XRP can get locked up and put to work is growing every single quarter, and that has enormous implications for supply. Here's a concept that doesn't get enough airtime in this space. Every time XRP gets deployed into a yield strategy, locked into a lending protocol, parked behind an ETF, or staked in a liquidity pool, it gets removed from the available supply that could be used for cross-border settlement and liquidity. Right now, most of us who are long-term holders have our bags in cold storage. We're not selling. That XRP isn't available for the open market. Multiply that by millions of holders doing the same thing, and then start adding institutional ETF lockups, AI agent deployments, yield vaults, and lending protocols on top, and the actual circulating, usable supply of XRP starts to look very, very different from the theoretical total supply number that people cite when they talk about why XRP can't go higher. The squeeze here is real, and I don't think it's being priced in yet, which brings us to the technical picture, and I want to lay this out clearly without any hype. Cassie from Cassie Trades, a technical analyst I respect, mapped out a potential 5-wave Elliott wave structure to the downside for XRP, targeting around 87 cents. The Fibonacci levels line up with that target perfectly. Here's how the structure breaks down. Wave 1 took us from the recent high near $1.29 down to approximately $1.12. We are currently in Wave 2, which should bounce back up toward $1.20 or so. Then Wave 3 takes us down to around 94 cents. A small Wave 4 bounce back toward $1.08. And then Wave 5 finalizes the move down to 87 cents. That is the end of your bear market for XRP, right there at 87 cents. That's the capitulation candle. That's the moment where retail throws in the towel, just as the best opportunity of the cycle is sitting right in front of them. The key level to watch is $1.22. That's the classic 61.8% retracement target for Wave 2. If XRP shows exhaustion around that level, the entire structure stays intact, and we continue toward 87 cents. If we break convincingly above $1.30, this specific wave count gets invalidated, and we need to recount. But here's the most important number in this analysis: $1.65. Until XRP breaks above $1.65 and flips that level to support, we are not talking about a bull market resumption. I don't care about the hopium. I don't care about the steam train emojis. Until we close above $1.65, the bear market structure is still valid, and the 87-cent target is still on the table. Now, the timing on this structure projects the final low into late June or early July, which mirrors almost exactly what we saw last year before XRP hit its all-time high in mid-July. History doesn't repeat, but it does rhyme. Basically, what we're looking at is a full 12-month bear market cycle, from the highs near $3.65 all the way down to roughly 90 cents, designed to completely wipe out retail sentiment so that nobody wants to touch this asset right at the exact moment it's about to absolutely rip to the upside. And if you've been through 2 or 3 of these cycles, you know exactly how this script goes. The pain is real. The fear is real, but the setup is also real. When you've lived through this process before, you stop flinching. You just look at the chart, you do the math, you put in your buy orders, and you say, "Thank you very much." Because these moments are gifts disguised as disasters for everyone who doesn't understand the cycle. Now let me tie in that carry trade analysis I promised you. The last time we saw an aggressive yen carry trade unwind, August 2024, XRP dropped roughly 35% over the course of about 1 week. XRP was sitting around 66 cents, and it dropped all the way to 43 cents before finding its footing. Now map that onto where we are today. XRP hit $1.29 recently. A 30 to 35% drop from that level lands us right in that 87 to 90 cent range. Bitcoin dropped roughly the same percentage during that same August 2024 unwind. So if the yen carry trade starts unwinding aggressively again, and what we saw this morning in the currency market suggests that pressure is building, we could see a fast, sharp move down in both Bitcoin and XRP that aligns perfectly with the technical structure Cassie laid out. I'm going to be placing my buy orders this week, and I'll be sharing the exact levels with my Discord group in real time. If you want access to that, Sign up through Patreon, and you'll get into our private Discord community where we have those conversations live as the market moves. The final bear market buying opportunity for XRP is not a maybe. It looks like it's right on our doorstep. This could genuinely be the last chance any of us gets to pick up XRP below $1. Whether it's now or in the next 30 days, as we head toward the July 4th celebrations and the 250th anniversary of this country, the window is short. So know your targets, have your orders ready, and don't let the fear of that final flush take you out of the position right before the launch. Thank you for watching. God bless you all. Let me know how you're playing it in the comments. Smash that thumbs up on the way out, and I'll see you in the next one. This is Coin Crusader. We'll be back tomorrow.